Welcome to the Deep Dive, the show where we cut through the noise and deliver those essential nuggets of knowledge. Today, we're taking a closer look at ClearSign Technologies Core's Q2 2025 earnings call. That's CLIR.
Well, it's to unpack those headline numbers, understand the crucial operational progress, and figure out what it all means for this innovative company's future.
That's absolutely right. For a microcap like ClearSign, the raw financial figures often don't tell the full story. It's incredibly important to look beyond just the immediate revenue and dive into that qualitative progress, the project milestones, the strategic shifts. That's what really indicates where the company is headed, especially, when the market's initial reaction might kind of lead you astray.
Okay, so let's start with the immediate snapshot then. ClearSign's Q2 2025 financials. Because it certainly presented a mixed picture, and the market reacted with some caution. You ready for some numbers?
Yeah, lay 'em on us.
Okay. Revenue came in at $0.133 million. Now, that's a whopping 505% increase year over year from Q2 2024, which, sounds like incredible growth. Huge jump, yeah.
But it was a significant miss against the consensus estimate. That was closer to $0.64 million. So on one hand, massive growth. On the other, a big miss against expectations. Kind of a classic paradox, right?
It absolutely is. And while that top-line revenue definitely disappointed against the estimates, they did manage to deliver a GAAP EPS that's generally accepted accounting principles earnings per share of negative 0.03 cents.
Okay.
Now, that actually beat the consensus estimate, which was negative 0.04 cents. So still a loss, obviously, but smaller than analysts predicted. The net loss narrowed too, down to $1.39 million. That's an improvement of about $0.10 million year over year. And this was largely attributed to about a $0.155 million reduction in R&D expenses. So it shows some fiscal discipline there.
Yeah, I noticed that discipline on the cash front too. Operating cash use significantly improved to $0.51 million. That's down sharply from $1.5 million in the prior year. What drove that impressive reduction?
That was primarily driven by customer cash collections. It means they're not just booking orders, they're actually getting paid, which is, it's vital for any growing company, especially microcap. They ended the quarter with a solid $12.3 million in cash and cash equivalents and 52.4 million shares outstanding. So good cash position, reduced burn. But despite these, positive operational signals, the stock did experience a notable downturn after the announcement. It really reflects investor focus squarely on that revenue miss.
Okay, let's unpack that market reaction a bit. Investors clearly focused on the revenue miss, but you've highlighted some serious operational wins. Is the market missing the bigger picture here? And if so, what specifically should we be looking at beyond those immediate numbers?
That's a crucial question. What's fascinating here is that, the market fixated on the immediate revenue. The earnings call itself really illuminated significant operational milestones. And for a company like ClearSign, these are often the precursors to substantial future revenue. These are the kinds of developments that lay the groundwork for long-term growth, even if the timing of revenue recognition can be a bit lumpy, a bit unpredictable sometimes.
You're right. Okay, so let's pivot then and dive deeper into those operational milestones and project progress, because there's a considerable amount of activity happening behind the scenes that truly defines the company's trajectory. What's first on your radar?
Absolutely. First up are their major process burner projects. The much anticipated 20 burner project for a California refiner is basically on the cusp of startup literally in the next couple of weeks. ClearSign management has been on site overseeing the installation, and this isn't just another installation. Its successful startup isn't just about revenue, though that's important. It's the kind of high-profile, real-world validation at a major refiner that could literally open doors to a whole new tier of clients, the ones who demand proven performance before they commit. It could transform them from just a promising innovator into a truly proven solution provider.
That's a huge step, absolutely. And what about the 26 burner project, the one for that Gulf Coast chemical company?
Right, that one. It's successfully completed testing and is now moving into manufacturing. Shipments anticipated sometime in 2025. Now, here's a key point. Its startup has been pushed to early 2026.
Okay, so a delay.
Well, yes, but it's vital to distinguish this from a project cancellation. This is a timeline extension granted by the Texas Commission on Environmental Quality, the TCEQ, for the client. It's not a ClearSign delay or a lost order. No. So the revenue is still coming, just, a bit later than initially hoped.
Okay, good distinction, important one. But ClearSign isn't putting all its eggs in one basket with these huge projects, right? They're also smartly expanding their reach with the M-Series product line, tapping into a different but equally important market segment. I saw they introduced something called the M25 burner. What makes that particularly interesting?
Yeah, that's where it gets really strategic. The M series continues to see strong interest, particularly from the midstream sector. Think pipelines, pumping stations, gas processing plants, that sort of thing. Their first M series installation, the one at a Tulsa-based midstream heater, it just continues to operate flawlessly. And a second M1 burner was sold to Defco, another heater manufacturer, with its startup expected later this year. The M25 burner, though, that's a detuned version of the M1. Essentially, it's designed to target a broader, higher volume segment of that midstream market. This segment needs good low NOx performance, sure, but not necessarily the ultra low, like single-digit levels the M1 achieves. By offering a reduced price and scope, they're opening up completely new market opportunities. Think of it like this. Sometimes you need a Ferrari for that ultimate performance, right? But most of the mass market, they need a reliable and more affordable Ford F-150. The M25 is kind of ClearSign's F-150. It significantly expands their addressable market.
That analogy works perfectly, yeah. It illustrates the strategy really well. And they're not just sticking to their core burner tech either, are they? They're diversifying into new product lines like flares and even complete systems.
Precisely. The first of their new flare designs is already out in the field, just awaiting installation later this year. And here's where it gets even more interesting. They've secured a second order from the same client. That one's currently in the computer modeling phase.
Repeat business, always a good sign.
Exactly. That's expected to lead to a detailed engineering order in Q4 2025 and then equipment supply in early 2026. This repeat business, it speaks volumes about client confidence.
And the value of these new opportunities is quite striking, isn't it?
It is. Proposals for flares and these systems projects, which are basically complete flare systems or thermal oxidizers, pollution control for industrial exhaust, they're approximately 10 times higher in value year to date compared to last year. Individual system units range from $500,000 up to $1 million. So that represents a substantial increase in potential project size. It shows ClearSign is moving into higher value, more integrated solutions.
Then there's the DOE hydrogen burner project. That's in its final stages, you mentioned. What's the significance there?
Yeah, this project is really key to future energy solutions. New, large, and small burners are currently in manufacture. They're scheduled for installation and demonstration at the Zeeco test facility in the coming months. What's particularly exciting about this project is that it's drawing significant interest from household name end users in the industry, big players. This really underscores the growing relevance of hydrogen-ready combustion solutions and, ClearSign's position at the forefront of that trend.
Another intriguing development is with their ClearEye sensor technology. Remind us what that does.
Right, ClearEye. It confirms flame presence on a burner pilot, which is actually a critical safety and operational requirement for refinery control systems.
Okay, and what's the latest on its deployment?
Well, the first commercial demonstration installation, this is for a super major refiner on the Texas Gulf Coast. It's nearing fabrication completion. They're just awaiting client confirmation for the actual installation. They're looking at an expected 3 to 6 month evaluation period once it's up and running. And crucially, a second commercial proposal for additional sensors for the same refiner is already pending the first evaluation success.
Wow, okay. Moving fast.
Yeah. Plus, another installation is planned for an LA refinery, this time on ClearSign's own burners later this year. And the ClearEye tech will also be integrated into that DOE hydrogen burner demo at Zeeco. This is seen as a way to open other doors, Establish ClearSign as a broader technology solutions provider, not just a burner company. It builds on their IP, expands their market further.
So if we connect all these operational advancements, all this progress to the bigger picture, ClearSign's strategic partnerships seem absolutely key to unlocking broader market access, especially the one with Zeeco.
That's spot on. The co-branding agreement with Zeeco, a global combustion equipment company, roughly $1 billion in revenue, launched back in March 2025. It's a potential game changer.
They're working daily with Zeeco's marketing, sales, and engineering teams. That sounds like an incredible force multiplier for market penetration. But how quickly are we seeing results there? Is it translating yet?
Well, while Zeeco is actively pursuing opportunities, promoting the co-branded CS5 hydrogen CS5 burners, no firm orders have materialized yet. Management expects realistically about a 9 to 12 month ramp-up period for real traction. which, in the world of large industrial sales cycles isn't really uncommon. I mean, you don't just add to cart a multi-million-dollar industrial burner system right
Yeah,
now.
not quite, no. So why is this partnership so profoundly important then, even with that ramp-up time factored in?
Look, this partnership is crucial because Zeeco provides immediate global market access. They've got a vast industrial test facility, sophisticated manufacturing capabilities, things ClearSign can leverage without having to build them all themselves. Huge cost saving, huge time saving. It extends Zeeco's product portfolio into that ultra-low NOx range, letting them compete directly with selective catalytic reduction, or SCR, systems, which are typically much more expensive and complex to install and maintain. Plus, it offers significant financial incentives because the margins in ClearSign's high-end products are pretty high. It's a classic win-win. Zeeco gets a cutting-edge solution, ClearSign gets unprecedented reach.
And a core reason they can even develop these cutting-edge solutions, as you've touched on, is their technological prowess, particularly in computational fluid dynamics, CFD. Can you just remind us quickly how that gives them an edge?
Right, CFD. It's essentially advanced computer modeling. It predicts how gas flows, how it interacts, turbulence, chemistry, heat transfer, all within these really complex combustion systems. Think of it like getting a real-time MRI view inside a heater. It lets engineers see exactly how gases will behave and react before anything is even built. ClearSign leverages this world-class capability led by their CTO to rapidly optimize designs. This allows for new tech development, enhancements with remarkable speed and accuracy, like that M1 burner we mentioned. Worked flawlessly right from its initial CFD design. It significantly de-risks product development and dramatically speeds up time to market. That's a huge competitive advantage in this space.
Okay, so we've covered the numbers, the operational wins, the strategic groundwork. Let's try and tie this all together for our listener. Given that cautious market reaction to the revenue miss, what specifically should be top of mind for anyone tracking ClearSign? And what are the key catalysts for future growth we should be watching for?
That really is the million-dollar question, isn't it? While no formal quantitative guidance was given, management did reiterate their focus on their cash runway and, critically, achieving these specific project milestones we've been talking about. The market's reaction clearly fixated on what it perceived as timing slippage on revenue, rather than, fundamental project cancellations. And that's an absolutely vital distinction to make.
Agreed. So what are those specific catalysts then? What are we actually watching for on the ground?
Okay, there are several, and they're quite tangible things to look for. First, and maybe most importantly, the successful startup, and crucially, the performance data coming from that California 20-burner project. This is paramount. Second, that 26-burner Gulf Coast project moving from its purchase order stage to actual shipment in 2025. That's expected to be a significant revenue driver when it hits. Third, we need to see the conversion of additional engineering orders, particularly for flares and those process burners, into full equipment orders. We also need to see increased traction, actual order conversion from that Zeeco co-sell agreement. That needs to start kicking in. Further milestones in the DOE hydrogen burner project, like witness testing, those are key indicators of future market adoption. And finally, successful field demonstrations of the ClearEye sensor, validating its reliability and performance in the real world, that will be critical. Oh, and there's also the potential for new opportunities popping up from changes in Texas NOx regulations for the TCEQ. That could create a nice tailwind for them.
It really sounds like the qualitative story, the actual work being done, is quite strong, despite what the recent headline numbers might suggest to a casual observer.
It definitely is. The project pipeline level has held strong. It's standing at approximately twice the amount of proposals and, get this, 5 times the project value compared to the previous year. And what's a monumental step forward is that ClearSign technology is now apparently being requested by heater manufacturers for new projects.
That's a shift.
Exactly. That's a powerful signal of growing industry recognition and demand. It's moving beyond just ClearSign pushing their solutions out there. Plus, as we noted, ClearSign has demonstrated improved operational cash burn, trimmed R&D and G&A expenses. It indicates tighter operating discipline and, efficient use of their capital.
But the market reaction was still negative. Why the disconnect, do you think, if the qualitative story seems so compelling?
Well, despite all the operational progress and these qualitative highlights we've discussed, that substantial revenue miss and the perceived timing slippage on projects, it simply led to that negative market reaction. It spooked investors short term. Management acknowledged the market uncertainty and the delayed timelines, citing factors like tariffs, environmental requirements, things somewhat outside their direct control. But they expressed optimism that conditions will settle, which should positively impact ClearSign. The overall sentiment, as we assess it, remains kind of cautious constructive. Investors are basically waiting for proof of execution on those delayed revenues. Show me the money, right?
Right. And just to address one quick thing, there was some recent news about board realignment. Is that something our listeners should be concerned about? Any red flags there?
No, not really. Management confirmed that the reconstituted board is energized and focused on growth, and apparently there's no rush to fill the one open position. That suggests a strategic and stable direction for the future, rather than indicating any internal turmoil. So, probably not a major concern.
Okay, good to know. All right, now for our This Is Not Financial Advice segment. Remember, everyone, everything we discuss here is purely for informational purposes. Always do your own due diligence. This is just us thinking out loud about some of the more provocative possibilities based on the data.
Okay, so for ClearSign Technologies, CLIR, here's an outrageous but plausible trade idea to maybe mull over. The market has, arguably, already overpunished CLIR for what looks like timing slippage on revenue, not fundamental project cancellations. The stock's currently trading at pretty low levels, down about 25% year over year from recent highs. Yet the company has, as we've discussed, a robust high-value pipeline. And critical, significant projects like that California 20 burner are literally on the cusp of actual startup and producing performance data.
So the idea is what exactly? How would you play that?
Well, the idea would be to consider a highly concentrated, maybe conviction-weighted long position in CLIR. The outrageous part is trying to time this. Timing it immediately before the official announcement of that California 20 burner project startup. And crucially, its initial performance data becomes public. If this critical reference project is successful, and if it's validated publicly, it could potentially trigger a significant multiple expansion for the stock. It could attract new institutional interest. And that could rapidly increase the share price, even despite the current thin microcap liquidity. This is really a bet on execution, a bet on a market re-rating of the company once that timing slippage narrative turns into actual confirmed revenue and performance validation. You'd, of course, absolutely have to set a tight stop loss below recent lows to manage the inherent volatility of microcaps. But the potential upside, if this catalyst hits positively, could be substantial given where the valuation sits right now. It's a high-conviction, definitely high-risk thought experiment based on a potential market mispricing of timing versus the core underlying value.
That's certainly a bold idea, yeah, predicated heavily on the successful execution and that public validation of those critical project milestones. So, to recap quickly, ClearSign Technologies saw mixed financial results in Q2 2025. A notable revenue miss led to a cautious market reaction. However, underneath those headlines, there's significant operational progress across major burner projects, new product lines like the M25 and flares, and their CLIR sensor technology. The project pipeline remains strong, and strategic partnerships like the one with Zico are poised for future impact, even if it takes time.
That's right. While the short-term market reaction was definitely negative, the underlying strategic story, the technological advancements, and those eminent project milestones, they're absolutely worth watching closely for potential long-term growth. The focus now shifts squarely to execution and converting that robust pipeline into tangible, recognized revenue. That's the key.
We encourage you, as always, to continue your own research and consider the insights we've discussed today. This has been a deep dive into ClearSign Technologies Core.
And remember, nothing we've shared here constitutes financial advice.
Thanks for joining us on this deep dive. We'll catch you next time.